Welcome to Talk Tickers. If you're looking for the core insights from earnings calls, without sitting through the whole hour.
Or more sometimes.
Exactly, you're in the right place. Today, we're diving into Elemental Altus Royalties, their recent Q4 and full year 2024 numbers.
And looking ahead to 2025, which seems pretty significant for them.
Right. Our mission, as always, is to pull out the vital info, get a sense of management's view, and talk about what it means.
Let's do it. So, headline, record revenue. Again, that makes it 8 years straight.
8 years. Wow. Okay.
Yeah, quite a run. Full year adjusted revenue hit, $21.6 million.
Okay.
And Q4 itself was particularly strong. They posted record adjusted EBITDA, that's earnings $4.8 million for the quarter.
And how does that compare?
That was up 72% compared to the same quarter last year. Big jump.
72%. Okay, that definitely catches the eye. What was behind that?
Well, a mix of things. Good performance from their royalties, but
Right.
also a key acquisition they made in Q4 really helped. We can get into that.
Yeah.
And this translated to cash flow, too. Operations cash flow plus dividends from Caserones came in at $3.3 million for Q4.
Also up significantly.
Yeah, 54% higher year over year. So revenue's up, cash flow's up.
Solid momentum. And the balance sheet debt situation?
Good shape. They actually ended the year with net cash on hand. That was after paying back $27 million in debt during the year.
Okay.
And since year end, they've actually fully repaid their credit line. So that whole $50 million facility is now available untouched.
Mm-hmm. So they have firepower if needed.
Exactly. And looking forward, management sounds pretty confident. They're forecasting record revenue and record free cash flow for 2025.
Another record year. So what's driving that forecast?
A couple of main things they pointed to. First, they expect a fair bit of extra cash from milestone payments, somewhere between $13 and $15 million across the year.
13 to 15 million just in milestones.
Yeah, and a big chunk of that, about $10 million, they said they expect, like this month. So very soon.
Okay, that's a near-term boost. What
Yeah.
else?
Production. Their guidance for 2025 in gold equivalent ounces, or GEOs, is also a record.
What's the number?
They're guiding for 11,600 to 13,200 ounces. That's about a 38% increase from 2024.
38% production growth. Impressive.
It is, and based on that, and using a, what they call the conservative gold price of $2,600.
Which seems pretty conservative right now.
Right. Their 2025 adjusted revenue guidance is $30 to $34 million.
So potentially a 50% jump on 2024's revenue.
Yeah, that's the implication. Big growth expected.
Okay, let's dig into some of those drivers then. You mentioned an acquisition in Q4, AlphaStream.
Yes, the AlphaStream deal. It looks like a smart move because it immediately boosted their producing assets.
How so?
They basically bought increased ownership in 3 royalties that are already paying them: Bonro, Ballarat, and SKO. These are all in Australia.
Ah, okay. Existing cash flow stream.
Exactly. Plus, they picked up some exploration assets nearby, too. The company figures this deal adds about $6 million in annual revenue right off the bat.
6 million. And potentially more if gold stays high.
That's the idea, yeah. It gives them more leverage to the gold price on those assets.
Makes sense. Then there's the Carloinda expansion project you mentioned earlier. What's the status there?
Right, Carloinda. So the expansion is moving forward. They expect to get the permits sorted out this year.
And when would the expansion actually start contributing?
Operations from the expanded part are slated for 2026. And it's a significant boost, supposed to increase throughput by 50%.
50%.
Yeah, and that should lead to roughly a 30% increase in gold production from that mine starting mid-2026.
And the mine life. Does the expansion shorten it?
Apparently not significantly. They said it still has over 10 years of life left, even after the expansion.
Okay, good to know. What about McTung, the tungsten royalty?
McTung, right. That's in the Yukon.
Okay.
Interesting development there. Late last year, they secured government funding.
Oh, from who?
Both the U.S. and Canadian governments chipped in. The money is specifically to fast-track the feasibility study.
So speeding things up.
It's like it. Feasibility study now targeted for 2026, and they're hoping for a final investment decision by 2028. Government backing is usually a pretty good sign.
Definitely de-risks it somewhat. Okay, another one, Carolee Sud. That's a new producing royalty?
Yeah, Carolee Sud. Used to be called the DA Project. Allied Sadiola started production there in Q4 last year.
And how did that start off?
Pretty strong, actually. They produced 49,000 ounces just from the royalty area in that first quarter.
Wow.
So Elemental Altus expects its first royalty check from Carolee Sud anytime now, basically in Q1 2025 results.
And potential milestone payments there too.
Yes, there are milestones tied to Carolee Sud as well. Adds another layer.
Okay, let's touch on some of the established assets. Caserones, any issues there?
Caserones saw slightly lower production in Q4. They mentioned some hydrogeological issues impacting grades and recovery, water-related, essentially.
Okay, so a temporary dip.
That's the expectation. They think those tons, that copper, will come through later this year. And London Mining, the operator, still has strong guidance for Caserones for 2025, 115,000 to 125,000 tons of copper.
Got it. And Bonro, you mentioned they increased their stake there via Alpha Stream.
That's right. They double their exposure. Effectively, it's now a 4.5% royalty for them.
And production outlook.
Expected to be over 90,000 ounces in 2025 from Bonro. And the operator, Allied, mentioned they expect to hit higher grade zones in 2025 and 2026 because of stripping work they've been doing.
Okay. And Borat or Ballarat, the other one they doubled up on.
Yeah, Ballarat. The focus there with new management at the mine apparently is on cutting costs and pushing production up. They're even looking at spending some capital to improve throughput.
So potential improvements there too. Any other assets mentioned?
They briefly mentioned Western Queen in WA. They're thinking about potentially toll milling the resource there, so using someone else's mill to process their ore.
Right, a lower capital way to get some value.
Could be.
Okay, so back to the financials. That debt repayment gives them flexibility. What are they planning to do with it?
Well, the key is flexibility. Having repaid that $50 million facility means they can jump on acquisition opportunities without necessarily having to issue shares and dilute existing owners.
Which investors usually like to see.
Definitely. And they also flagged several one-off cash payments coming their way this year.
Like the milestone payments?
Yeah, besides the big potential $15 million, there's $1 million due from Allied now that Carolee sued hit commercial production.
Oh, okay.
Then there's the big one, almost $10 million expected any day now from the final Ming Mine settlement.
Ah, that's been ongoing for a while.
Yeah, it seems to be wrapping up. Plus, they plan to receive $1.9 million from a buyback of their Cactus royalty around mid-year.
Okay.
And maybe $2 million more if Carolee Sud hits 100,000 ounces this year, though they felt that might slip into early next year. And a $1.5 million deferred payment for McTung due in Q3.
So quite a few cash injections expected on top of operating cash flow.
Exactly. Strengthens the balance sheet even further.
What about shareholder returns? Buybacks? Dividends?
They have a share buyback program and NCIB in place.
Yeah.
They said they'd consider using it if they feel the shares are really undervalued. And they specifically mentioned they're actively exploring a U.S. stock listing.
Why would they do that?
Primarily to improve liquidity, make the shares easier to trade, potentially attract more U.S. investors.
Okay. Any talk of dividends?
They mentioned the board discussed it recently in a strategy session, ways to improve liquidity and return cash.
Okay.
They did note the company paid a dividend when it was private, so it's clearly something they've thought about.
Interesting. Anything else outside the core royalty business? Egypt?
Right, the Egypt assets. Their partner there in two metals is spending $10 million to earn an 80% interest.
Are they active?
Very. They've done 2 drill programs, committed to a third. Elemental expects them to hit that $10 million spending threshold this year.
Which suggests they're seeing promising results.
You'd think so, yeah. Once the earn-in is done, Elemental keeps a 20% equity stake plus a 1.5% royalty, uncapped.
To still maintaining some upside there. And deal flow. Can they still find deals with gold prices higher?
They said yes. Pipeline is active. They're looking at things ranging from, $2-4 million deals up to maybe $50-60 million opportunities.
Still focused on gold?
Primarily gold, maybe copper. And focusing on assets near or already in production. They claim they haven't had trouble closing deals despite the higher gold price.
Okay, so let's wrap up the investor perspective. How are they pitching this to the market?
They're really hammering home the growth story, pointing out the revenue growth has been leading many peers in the royalty space.
And valuation.
They believe you're trading cheap. They specifically said one of the lowest price to revenue multiples in the junior space, much lower than mid-tiers and majors. So an attractive entry point in their view.
Highlighting the discount.
Exactly. Combine that with the growth they see coming in 2025 and into 2026 from expansions in operator plants.
And the financial flexibility for more deals.
Right. Non-dilutive deals, potentially.
Yeah.
Focus stays on gold and copper. And they see consolidation happening in the junior royalty space as maybe an opportunity for them too.
One last point, did they mention upside from even higher metal prices?
Yeah, they did touch on that. If gold went significantly higher, say $3,000 plus, some of their development assets that look marginal now could suddenly become quite interesting.
Yeah.
They mentioned Labaton in WA, Pickle Crow, Hope Brook in Canada as examples.
Okay. potential latent value there. Right, let's shift gears. Time for our This Is Not Financial Advice segment. What's an outrageous but plausible trade idea bubbling up from this?
Okay, here's one angle. You take management at their word. They think gold's going higher. They think their stock is undervalued compared to peers, and they've got visible growth coming.
Right.
So the trade could be go long Elemental Altus ELE on the venture or EAR on AIM.
Okay, the long part is standard enough. What's the outrageous bit?
You pair it with short positions in a basket of other junior gold royalty companies. Specifically, pick ones that trade at higher price to revenue multiples right now, maybe ones without such clear near-term growth catalysts.
Ah, a pairs trade based on relative valuation.
Exactly. The thesis is that as Elemental delivers on its growth, that valuation gap should narrow. Either ELE's multiple expands, or the others contract, or some combination. You're betting on that convergence.
Betting on the market recognizing the value, definitely plausible, if speculative.
Highly speculative, absolutely. Not advice, just an idea based on their narrative.
Got another one.
Maybe something more event-driven. They talked quite a bit about exploring a U.S. listing to boost liquidity and visibility.
Right, the potential NASDAQ or NYSE listing.
Yeah, so a different kind of speculative play would be to take a long position now, specifically anticipating that a successful U.S. listing announcement could be a major catalyst.
Betting on the listing itself driving the price.
Pretty much. Access to a much larger pool of U.S. investors, potentially higher trading volumes, maybe a re-rating just from being on a bigger board. It's higher risk because the listing isn't guaranteed, and the market reaction is unpredictable.
But if it happens and the market likes it?
Could be a significant short-term pop. Again, pure speculation, high risk, not advice.
Definitely some food for thought there. But as always, you need to do your own homework before making any moves. So that wraps up our deep dive into the Elemental Altus Royalties earnings call.
We've hit the key financials, the growth drivers like AlphaStream and Carloinda, the milestone payments, the balance sheet strength.
And those potential catalysts like the U.S. listing. What really stood out to you listening in? Was it the consistent growth, the acquisition strategy, maybe that potential valuation gap?
Lots to chew on.
For sure. If you have more specific questions, reaching out to Elemental Altus directly or checking their investor materials is always a good next step. Thanks for tuning in to Talk Tickers.
We'll catch you on the next deep dive.